Okay, so the S&P has made many treacherous moves lately as volatility has increased and stocks are correcting. In fact, the index is on the verge of triggering a bull trap, and this scenario could easily materialize. However, in order to do so, the S&P would have to reject many bullish structures it has given us in the recent weeks. The recent move has been quite misleading, quite deceptive, but if you look closer, you will find some sense in this market, and in this video I will keep you updated with the most important key points, technical points to keep in mind for now. Welcome to the Finance Hydra channel. My name is Nathan. Let's start our technical analysis on the S&P index. First, yes, last week we did a quite treacherous move. We did a correction. We dropped minus 1.11%. We lost the 4100 support level, which was a previous top level, and at the same time it was a key point in the weekly chart. We lost it. We dropped it. We closed it under 4100. But right now, this week, it seems the S&P is trying to react and it is trying to reject the previous bull trap over here. Could the S&P still materialize this bull trap? Yes, but again, we gotta lose some important key points which we are gonna describe in more details later. First, in the daily chart, we see that since February 2, the S&P has been correcting, but it feels like it was just trying to get closer to the 21 exponential moving average in the daily chart, and right now we are already reacting. And if we take a closer look in the 1 hour chart, we see a possible descending channel on the index. Right now we are still inside this channel and we don't see any crystal clear breakout yet. We might do an upwards breakout or a downwards breakout. There's no clear rule about that. Still, today it feels like the 4100 is still working as a support level for us, and if we break this descending channel upwards, probably the bullish sentiment will resume and the S&P will remain bullish. If we lose 4100, probably we are going to retest the lower level of this descending channel, and if we break it, then okay, we are gonna see the first clear bearish reversal structure on the index, which could take us back to the 4K or even to lower levels. The 4K, to be more specific, the 4015 over here, this red line, was a previous top level and support level over here on January 30 and might work as a support level again. If we lose this key point, then a sharper pullback will materialize in the weekly chart, maybe to much lower levels. However, this scenario didn't materialize yet, and maybe it never will, because the S&P is still in a bull trend in the daily chart. We are still doing higher highs, higher lows. We are still doing this, right? Yes, right now we are doing a low, but this low is still higher than the previous low. If we keep reacting like we are reacting right now, odds are that the S&P is going to trigger another bullish pivot point, another higher high, and again, the bullish bias will just persist. So, to answer your question, could the S&P drop from here? Yes, of course, but it gotta lose the key support level at 4100 first. As long as we stay above 4100, we can't talk about this bearish scenario for real, okay? We can't take this scenario too seriously. Right now, we are above it, so probably, most likely, the S&P will keep going up. If we take a look at the monthly chart, we are still going up. We did a very good reaction just above the 38.2% Fibonacci's retracement, and right now there is no top sign on the S&P yet. We tried to do a top sign last week, but this top sign was not triggered yet, so okay, we are still going up. Now, yes, there are some other weird signals because bonds, for instance, are actually going up. If we take a look at how bonds are behaving, the 10-year yields, we found a bottom level over here just above a previous top level, and right now it feels like we are trying to react again. It feels like it is trying to do a double bottom chart pattern over here, am I right? Of course, this double bottom was not triggered yet, and maybe it never will, but still bonds are in a bullish bias right now. We just broke this descending trend line over here, this purple trend line, indicating that we could go a little bit higher from here, and this is quite problematic for the index. In addition, VIX is going down along with the S&P, which is quite rare. If I remember correctly, VIX and SPY, they have a negative correlation 80% of the time. So today is one of these weird days when we see both dropping. In fact, yields, the fear index VIX did an upwards breakout from this descending channel over here, indicating that it could go a little bit higher. But right now we are crashing again, trying to frustrate this bullish bias in the daily chart, and in the weekly chart we are doing a massive drop over here, and the week just started. If we analyze the put call ratio, we are at 0.91 right now. A few weeks ago we were very over bullish over here. It was around 0.70, right? We were quite over bullish, but right now the index is correcting and it is trying to stabilize in the area where it is right now. And regarding volatility, let's take a quick look at how options are playing right now, because options are quite interesting, and we might have some interesting insights about how the market, how investors are behaving in this market. On SPY, options expiring this Friday, February 17, we see that the put call ratio is at 2.88. This is quite high. The maximum pain is around 402, so it feels like investors, although SPY is not necessarily bearish right now, we are not engaging a bearish momentum, investors are cautious. They are trying to protect themselves in this scenario. This put call ratio is quite high, and the maximum pain is way below the price right now. If we get back to our chart over here, the maximum pain is at 402, is below. Let's take a look at SPY's chart over here. Let me take a quick look. It is below the 21 exponential moving average. 402 is right here. So if SPY corrects from here back to the maximum pain level, we are talking about a drop of 2.5% roughly, right? So investors are trying to just protect themselves. And right now, of course, remember that technical analysis is not predictive, it is just reactive. As long as we don't see any crystal clear reversal signal on the index, we can talk about a sharper correction. So although we see some weird signs on options, on VIX, on yields, we still have yet to see a crystal clear price action move indicating that, okay, now the S&P is about to correct. Which reminds me, if you want to keep in touch with my personal insights, check my website, join the top 5% family, public track record. The link to my website is in the description of this video. Now back to the S&P. We have yet to see a crystal clear bearish reaction. Honestly, I would focus in the 1 hour chart, because this descending channel is quite interesting to me. If we do an upwards breakout, okay, great, probably the bullish momentum will persist, and in this scenario, the next technical target, mid-term speaking, is 4218. In the weekly chart, the 4218 is this gap area, but long-term speaking, the S&P could easily retest the 4300 up here near the next resistance level, because we are just triggering a bullish pivot point, and the next resistance is the next target in case of a breakout, of an upwards breakout of a bullish pivot point. So mid-term and long-term speaking, we have a very nice upside potential on the index. And of course, I'm gonna keep you guys updated on this channel. So if you're still a non-subscriber and you are still watching this video, come on, probably I earned your subscription. Join this channel, join the Finance Hydra family, daily videos on Tesla, the S&P, NVIDIA, and more stocks. Thank you very much for your audience, my dear friends. Stay safe. Farewell.